AMT is the alternative minimum tax. It's a parallel tax system. It's a law that came into play about 1969, and believe it or not, depending on who you read, it was directed at somewhere between 17 and 25 specific taxpayers. And you may recall back in the 60s that you'd see newspaper stories where Paul Getty, made 40 million bucks last year, but he paid no income tax. And so you've got Joe Sixpack, the average guy, picking up the phone, calling his congressman, wait a minute, I make $10,000, $15,000 a year working over here at the glass plant, and Gordon's paying nothing, and I'm having to pay taxes. What about this? And so they developed a separate parallel tax system that says we're going to take your same income items as the regular tax system, but there are going to be some specific things that have special tax treatment, and we're going to set them aside. They're usually accelerated depreciation on assets, percentage depletion on oil wells, did it for the Gettys, those kinds of things that create negative income and make your income go down for regular tax purposes. We're going to take those off the table, and then we're going to apply an alternative minimum tax rate. And that rate has a ranging scale, and then once you take those things off the table, then we're going to refigure your tax, and if your tax is higher doing the alternative system versus the regular system, you're going to pay the alternative system amount, the difference, as an alternative tax. Kind of busy, but it's because it hasn't been inflation indexed, it's affecting more and more people, and that's why it's becoming another topic that people are very interested in. If you have any questions about that, feel free to call us here at McRuer CPAs. I'm Scott McRuer. We'd be happy to help.